Hi, I'm Niël Pretorius. I'm the CEO of DRDGOLD. We are situated in South Africa, listed on the Johannesburg Stock Exchange, as well as the New York Stock Exchange. We're a gold producer, and we produce gold from mine waste or tailings.
An unusual gold producer is what you are. We've had a few good conversations in the past and kind of got into the weeds a bit, and I think there's a couple of components here. It's trying to understand what you are, because you're a dividend payer. You reclaim and how do you phrase what you do with the land that you've got?
Well, we restore the land.
Restore the land. Yeah. Okay.
So we don't backfill. We don't put the mine waste back onto the site where we reclaim it from.
Yeah.
So that's restored and then either used for light industrial or for residential, or in certain instances it just goes back to the way that it was naturally. If it's a wetland. In the old days, tailings dams were built in lower lying areas before environmental governance became a thing, and it's easier to take a fully laden hopper down a hill than up a hill. So many of the low lying areas that had become dewatered because of mining became filled up with old mine waste. So we've reclaimed a few wetlands and restored a few wetlands in the process as well, riverbeds, etc.
So reclaiming and restoring land, but extracting a lot of gold in your case. Focus primarily in Southern Africa or South Africa?
Yeah, at the moment only in South Africa. All of our operations are around the Johannesburg area and out towards the west, towards Carletonville.
Right.
And it's only from mine waste. So we don't create any new waste. We produce a product, but by reclaiming existing mine waste and just storing it somewhere else, where it's looked after slightly differently and maybe according to, not maybe, in fact, to a modern set of standards of environmental governance.
I saw it wonderfully described as sunshine mining.
Yes.
So it's well, I was about to say it's not complex, but it is, because you've got to be really, really efficient with the process, don't you? Because it's been mined already, it's been extracted already.
Yes, and look, and the assumption was that the old timers were inefficient. They were not. Sometimes they were in a bit of a hurry because they were mining a high-grade ore body, so they would sacrifice efficiency for speed, for throughput, but not a lot. Sometimes you would get an ore body, as we call it, that is maybe 0.02 grams higher in gold content than others, but that range is actually quite limited. So yes, we're on opposite sides of the scale. We're a mega volume company, but involved in nano extraction. We take out 180 parts per billion to 200 parts per billion.
Right. Okay. And you're currently going through a kind of transitional phase, right? So let me put this in context. You have almost award winning. You're second place in the Sunday Times top 100 South African companies based on the last 5 years of dividend payment, 638%. Not too shabby. Losing out to who?
To Gold Fields, another gold miner.
Right.
Yes.
668%. So not much in it. So you to do that, you got to continue to grow. You got to continue to process, right? So, but you are transitioning from a couple of sites at the moment to some new properties. Any issues with that transition period?
Yeah, we had various issues. We pride ourselves on the fact that we set ourselves up to take full advantage of the gold price when it's favorable, and whilst at the same time also being robust or resilient enough to make it through the down cycle, because we don't take any forward exposure. We actually take full forward exposure. We don't forward sell at all. We don't hedge any of our production. And this time around, because we had come off a number of high volume clusters, and we had delays in commissioning new high-volume clusters, there was a period of time of about 9 months that became fairly intense towards the end of the calendar year, where in 2 months we were really scrambling for tons, where instead of putting mainly high-volume material, hydro-mined material through the plant, we had to mechanically lift material from all old sites, legacy sites and clean-up sites and so forth. So it was tough, it was annoying, it was really frustrating. But the team did well in the sense that we didn't miss the mark by much. So production was down by roughly 8% because of that period on period. But tons were way down.
But explain that. So you basically you went from moving it using water, hydro, to having to truck it, clearly then exposing yourself to not just trucking costs, but fuel costs and personnel costs, etc., for a period of time. And have you worked your way through that? And when do you move to the old process?
We have, yeah. So I mean, the way that you set up the business is you invariably you have several sites from which you claim mine waste using high pressure hydro mining technology. So it's really a high pressure jet with which you wash it through.
Right.
And then you move roughly a ton every 5 seconds. That's the rate at which it's being mined.
So is it literally sort of large pipe?
It's a water jet, yeah, with a bend in it, or else it'll pick up the operator. And it'll be, so you've got to bend to offset the pressure, and this then it's like slicing a cake, but at an angle.
So I've seen it in mineral sands projects where they're doing this, but that's to kind of get at the ore body itself. The pile itself. But in terms of where do you move it through? So can you explain the actual process?
So it gets sliced with this high pressure water jet, and the slurry then runs into a sump, and then it gets pumped in certain instances up to 50 kilometers far.
Wow.
To the plant where it gets processed. And as I say, one operator moves about a ton every 5 seconds. So we try and make about 150 to 180 rand per site per 5 seconds.
Wow.
So to speak. And if you move enough of those tons, like 25 million per year, then your revenues are decent, and your margin could be fairly decent as well. Now imagine if a large percentage of your available face, as they would call it in orthodox mining, if that's not available because you've depleted a number of sites, and the sites that you had lined up to come in its stead have now been delayed because of either a regulatory issue or because of a community interfering with construction.
Right.
And that period carries on and on and on.
Yeah.
So you've got to now make up tons somehow.
Right.
Now, what we'd started doing a few years ago is, because of, our situation's been fairly favorable the last few years. We have been generating decent margins. So we've gone back to a number of older sites, legacy sites, that weren't entirely cleaned up, weren't entirely restored, but 5 of those. And we systematically started reclaiming material from there as well. Okay. But there you have to lift it mechanically. You have to put in loaders and trucks and so forth. And we had to very significantly accelerate the rate of cleaning up, because your cleanup material, it's lower lying material, so it's also higher in gold content.
Right.
So it's a completely different cost makeup.
Right.
So we had to do that, and we did that well, to the point where we pretty much cleaned up everything that there was to clean up in October of last year, and still hadn't commissioned at least the last 2 sites.
Okay.
And that's where the volume gap came in.
Okay.
Now those have now been commissioned. We've got the licenses, we've got the pipelines in, the community's happy. Not happy, but the issue has been dealt with, and we're processing we set up to process at the requisite rate.
Right.
We've come through that period of transition,
Just on the hydro thing, I want to make sure everyone understands the process here, because it's a very green. It's this called kind of remediation component to it, restoration component to what you do is really, really important. The hydro, is that on a kind of loop in terms of the water gets recycled? It shoots off one end.
It's a closed circuit.
Closed circuit loop.
And
okay.
It's of the water that we use, 95% is recycled water, or water that we get from grey water that's been treated to a point.
Yeah.
But it stays in a closed loop.
Got it. Okay.
We use very little potable water. South Africa doesn't have enough potable water to provide into our water requirements. We add about 30 million litres on a daily basis.
Right.
So as I said, about 95% of that is grey water, and deliberately so. We set it up in that way.
Okay.
So that is high pressure hydro mining. It stays in the circuit, and that's what you need to do in order to maintain a cost profile on a per ton basis that is sustainable, and whilst at the same time also generating sufficient volume throughput to have sufficient total revenue to cover your total costs. So you measure everything on a per ton basis, but also on a total cost basis. And it's when you run out of material, because of the fact that you weren't able to overlap the depletion of a former site with a commissioning of a new site, that you pick up.
So the plan would have been to obviously have that overlap slightly. You plan for efficiencies, but outside factors may change the timing of that, and you kind of got to fill that gap, as it were. Okay.
So there were 3 sites. I can give you the actual dates. So October 2022, 3 new sites, or with effect from October 2022, a few months apart, 3 new sites had to come on stream. One came on stream in November of 2022, the second in July of 2023, and the last only in January of 2024.
Okay.
With a fourth site where we reconfigured the whole setup and the mining method also coming on stream only in January of 2024. So it's a fairly significant delay where there was a lot of scrambling for tons from these legacy sites. But now, fortunately, they're all cleaned up. I flew over the whole area the other day, and they look lovely. They've been.
So who owns that? Does it go back to previous owners? You don't have any financial benefits.
Some of them we do own.
Right, okay.
The ones towards the far east, Rand, we do own. DRD owns about, give or take, about 6,000 hectares of land in and around the Johannesburg area, but that's mostly towards the east of Johannesburg, the newer Ergo footprint and the RPM footprint. Towards the central and western parts of Johannesburg, these are other property owners, like either the city council and private property owners. So the land there could be given back to those property owners and they could do something useful with it.
Including building property on some of these things as well.
Several of those sites. I mean, we've cleared about 200, if not more, mine dumps over the past 30 odd years. Maybe even longer. And several thousand hectares. And many of those sites are now either residential or light industrial or commercial. Some of them have simply just been restored back to nature.
Right, interesting. Okay, let's talk numbers here. Okay, so you said that, a few issues to overcome in terms of that transition last year. You're a dividend paying company, obviously, and we've talked about how much. It's been good to you. Have you done your 2023 year-end numbers? You haven't yet.
We've done the 2023 year-end numbers, yes, and we did pay a dividend, just over R500 million in dividends were paid out towards the end. Quite a lot's also gone into capital reinvestment. We're building a large solar plant, which is now also nearing completion.
Right.
It's generating about 14 megawatt as we speak, and it would be up to about 60 megawatt by the end of March of this year. And then power storage towards the end of the financial year, closer to October of this year. So a lot of money is going into that, a lot of capital going on, but we're in a position to pay all of those because we started the 2023 financial year with just over 2.5 billion rand in the bank, and that's now been, just over $1 billion of that's been spent on CapEx and on the dividend and on tax. We pay tax as well. And then, as I say, fortunately, we're now at a point where the cost profile has been restored to what it was. Fewer yellow machines. It'll be interesting to see what effect the solar plant's also going to have on the cost profile.
Is that to give you some consistency? I know the South African energy spire has had issues. I mean, we're suffering from load shedding whilst we're here in Cape Town, and the costs have been ramping up over the past, certainly 5 years that I'm aware, and possibly longer. Being in control of your own destiny with regards to your energy costs, I mean, you must have looked at the time to recoup that outlay. I mean, why do solar? What's the benefits to you?
Oh, it's a very robust model. And in fact, the irony is that the mine needs the solar plant. Solar plant doesn't need the mine. It could be independent. It could be a very lucrative business, and we own it. We didn't go the independent power producer route, just to have it fund with the takeoff arrangement. It's 5 years in the making before we decided eventually that we're going to invest in a solar plant. Firstly, because we had the money to do it, but also because the technology had improved to the point where we thought that it's becoming more and more efficient. The regulatory regime has changed. It's become easier to build a plant of this scale, and also to feed the surplus power back into the grid where we could pull it off at other sites by way of wheeling. So you have the full benefit of all 60 megawatt that you generate. Notwithstanding the fact that you might not use it at that particular site. The reason why it took so many years before we started was, remember, the mines aren't switched off entirely. The mines are on a load curtailment arrangement, not on a load shedding arrangement. So the number of ounces that we had lost in the past as a consequence of the power situation really been because of unscheduled trip outs or where the power dips and you have equipment that gets damaged and so forth and so forth. But it's now where the actual model, assuming Eskom running full time and weighing that up against the economics of generating your own power, the model is just far more compelling to generate your own power. Plus, we're halving our carbon footprint. Plus, you now have security of supply, because it's right there. So it ticks a number of boxes. It adds to the resilience. It adds to the bottom line. It also adds to our environmental profile, to our ESG profile.
Right, so the balance sheet looking quite healthy at the moment. I should say, are able to continue paying dividends, have got a healthy balance sheet of your own to deploy for capital projects like this, should you wish. Are there any other protectionist strategies that you've got in terms of safeguarding your own future production, or at least maintaining it, that you're looking at?
Well, growth for us means firstly optimizing our existing asset base. So it's growth not in terms of throughput, but growth in terms of years. So we've got a lot of sunk capital. We've got large plants. We're extending the capacity of one of those plants, doubling it, the one in the far west rand, over the next 3 years, whilst at the same time also creating additional storage space. As I said earlier, the mine waste that we mine, we don't backfill, we take it to another site. So very significant investments going into that, hopefully to, well, as I say, not just optimize our asset base, but also extend mine life by ultimately also bringing in new resources from surrounding mines, or being a regional player, if not a owner of all of those resources, at the very least be a regional player. So there's focus in that regard, and there's a plan in that regard, and we're rolling out that plan. We're executing over the next 2028. The start of 2028 is an important period for us, because by then we would have wanted to put many of these things in place. But then at the same time also, I think the impact of our model of what we do is compelling, and it's worth taking it to other mining sites as well, where you optimize your waste. And I mean, if you have a really good mine and you don't need the revenues from your mine waste, then you could take all of those revenues, you could take all of the upside of what you're generating, which otherwise would have been just lying there, and you could reinvest that into your environmental restoration program. You can reinvest that into creating ecosystems to restore biodiversity. You could really turn it into something that goes beyond mere compliance. And I think, there's potential in that as well.
Well, that's what I'm interested in, because you're obviously Sibanye-Stillwater, big shareholder of the business, and you guys have got a technology which you're applying on a kind of large scale here. So I guess there's two trains of thought here. One is the expansion outside of South Africa. Sibanye has a lot of different assets around the world, and in Africa predominantly, but around the world too. Is there a way of packaging up the technology for others to use? Yeah. And can you insert yourself into other Sibanye assets where you can actually, well, it's about revenue, it's about growth at the end of the day. So how are you looking at the technology as a means for that growth?
Yes. Look, the mine method, the reprocessing and tailings is not as attractive everywhere as it is with the two assets that we've got, the two projects that we've got, Ergo and Far West Gold Recoveries. But at the very least, it's capable of, to the extent that there's sufficient redundant equipment, capital equipment available that you could repurpose for reprocessing. At the very least, by reprocessing it, excuse me, you're creating a revenue source that I believe enables you to reinvest back into environmental closure. Sometimes that the quality of that resource is such that it can stand on its own 2 feet, and that would be the case where you would say to the client, whether it not be Sibanye or any other operator, we could actually take charge of this site. If your objective here, if your goal is not so much one of commercial exploitation of a discard stockpile, if your objective is to restore this footprint, to bring about environmental closure, but to the point where you have an ecosystem that supports the biodiversity, the quality of this ore body is such that we could invest the capex, and that we could get sufficient of a return to justify the capex, whilst at the same time achieving the outcome that you want, namely of restoring the site. And you don't have to be involved. You don't have to take risk exposure in that regard, other than allowing us to go ahead. So that would be sort of the range, I believe, of what one could do, both within the group as well as outside of the group. So this knowledge, or this technology, or this intellectual capital, whatever you want to call it, I think is something that one could offer to other operators. And by assessing the quality of what's left, one could then give them some sort of an indication as to where within those two extremes
Yeah.
of just advisory or by assuming
Yeah.
full risk, one could fit this particular project. The understanding needs to be, though, that it's not another commercial arm to an existing business. It's something that's done within the context really of cleanup, of rolling back the environmental impact.
No, I get that, but you can't, you're not so altruistic. I'm going to do this. No one needs to make any money here. There's got to be a financial component to it. But I get it's ingrained in you guys in terms of, and I don't want to greenwash this conversation, but the restoration remediation component has a financial benefit to the owner. They've either got an environmental bond on it, or in some ways obliged to return it to its previous state, right? So for them, there's a financial benefit. For you too, there's got to be a financial benefit. I appreciate it's not a mainstay of the business, but it would make sense for you to make money, right?
But the whole idea of sustainable development assumes integrated value, or value at different levels. So you achieve a particular outcome. You create value on your way to something else, to a larger objective. And I mean, you made the point, if it's not altruistic, it's anything but that. We're not a movement. We're not an NGO.
Yeah.
We're a business. We're listed on the stock, on both JSE and New York Stock Exchange. We offer a compelling return. You mentioned earlier, came second this year. In fact, we came first in
638%. We'll say it again.
Yeah.
If it's worth saying, it's worth saying twice.
So if that's the sort of return that you can offer on your way to something, on your way to an idea of integrated value creation, of sustainable development, then why not? Then it means it makes sense. And that's why I became a very ardent supporter of Paul Pullman, who's, I think, one of the initial promoters of sustainable development as core to your strategic approach to your business. When I made the point earlier of what the expectation should be, I was talking from the perspective of the so-called client.
Yeah.
The client, we're of value for the client if the client views his tailings as a means to bring about a certain outcome within the context of whatever undertakings they give in terms of biodiversity, in terms of environmental restoration, etc. If the client, the expectation from the client is that somebody's going to write him a check for the stuff that he threw away.
Yeah.
We're not going to be that person. We're not going to be writing the check.
Got it. And that makes sense. Why would you do that? There's a real cost there upfront before you've even extracted any value. Right. So you're doing them a favor, and if you can construct it in a way that works for you, that makes a sensible conversation.
And they're not a favor in being nice. You're doing them. You're providing something of value in the sense that the balance sheet benefits from it, your environmental profile benefits from it, your risk exposure benefits from it. A restored environment doesn't pose a health hazard, or typically doesn't pose a health hazard to the communities around you. So you're not going to get sued for something that you left behind. The idea really is just that in terms of the financial model, you do not grow, in my view, a tailings business by buying up as many tailings as you can get your hands on. Because all you're really doing is you're taking care of somebody else's problems for him. You grow a tailings business by establishing associations with other companies and espousing the benefits of a collaboration, of working towards a particular point. And then depending on the quality of what's been thrown away, the quality of the whole composite, the remaining infrastructure plus the tailings, then figuring out a way that it benefits both parties. And if it's a good quality ore body, if it's good quality waste, then it means that you could justify a capital investment into infrastructure to get this whole thing going, because you're going to get an adequate return. And that's why I believe pursuing a broader commercial outcome, one that brings about both closure of a site, optimization of an asset, but also delivering into a variety of ESG objectives. That's why I think that's what this model lends itself to.
Well, I think it's good for mining in terms of its brand, because we've seen it over the last 2-3 years of a rise of a kind of woke agenda, it seems. ESG as it's called now has been called many things prior to that, and I think most good companies had a form of ESG long before the branding exercise happened. But this particularly brings closure to the end of a mining cycle at a particular location. And I think that's good in terms of that kind of, you talk about closed loop, that is a kind of closed loop there where you say, but look, we've put it back the way we found it. And I think that's really good news for people. But like I say, you're not going to do that for free, but hopefully all sides win in a scenario like yours. I mean, so if I look at the next 12 months for you guys, obviously that transitions, you migrated through to where you want to be back to the previous style, much more efficient process. In any other kind of upside to the way you're viewing 2024, 2025, an environment like we see ourselves, higher cost environment, gold is doing okay, but the margins are sort of staying across the board. How do you win?
Look, we've been very fortunate in the sense that notwithstanding the fact that the macro environment for gold is typically, if you look at the dynamics that have been out there, then it's not really been a particularly good environment for gold. And yet gold has been the gold price has been exceptionally high. And maybe it's because there are different buying patterns now. In the past, when the West dumped gold, then there was no safety net. Nowadays, it seems when the West dumps, the East accumulates. So they're sort of definitely changing the composition of their foreign currency holdings, and long may it last. That being the case, I do think that having now restored our mix, our setup, and how we process that our costs will benefit from it, and that finally we should be in a position to take full advantage of a favorable gold price. And I'm glad that we're here, because this was all-consuming. Dealing with the situation up until December was all-consuming. All of our efforts, all of our energy, everything went into that. But we've got lots to do to be ready by 2028. And it's nice to be able to now finally get to a point where we could say, that's going to be the focus. We can now really focus on that. Put in decent operators to make sure that the business carries on the way that it does. I'm talking about emerging young talent within the organization to assume different roles, et cetera, et cetera. But some of the old dogs focus on making sure that we set ourselves up properly for 2028, and then and make sure that we don't miss the target, that we get there. Whilst at the same time also looking at this other very ambitious sort of expansion of involvement in terms of clients and rolling out the model, et cetera, et cetera. I'm hoping that we get to do both.
Yeah, good to see you, man.
Thanks very much.
You know what,
appreciate it.
And you reminded me at the beginning, we'd never actually met face to face.
Yes, yeah, we have. Yes, I now know that there's more.
Yeah, there's more. I've got legs.
Yeah.